Hello and welcome to the Monday, January 13th, 2020 edition of Tesla Daily, unofficial Tesla podcast. My name is Rob Maurer. Today we are talking about quite a few different things, so we'll get right into it. But first, just wanted to say a quick congratulations to Elon Musk, to everybody at Tesla, to everybody that invested in the stock over the last year. It's been a volatile year, to say the least. But Tesla today finished up 9.8% to $524.86. It added another $7 or so in the after-hours session, up above $531 per share, meaning Tesla over the last 7 months has tripled. With a market cap around $95 billion, Tesla is now worth more than the combination of GM and Ford, or the combination of Uber and Lyft, and is about 10% or $10 billion in market cap away from surpassing Volkswagen as the second most valuable automaker. The $47 movement in the share price today was the second largest move for Tesla by dollar amount in its history, only second to a $49 move last year after the Q3 production and delivery report numbers came out. We'll go through the news, of course, but it's not like there was anything that was as significant today as a delivery and production report, and yet we continue to see that accumulation. Another fun fact on the share price movement today that I think is worth mentioning, if we include the after-hours session, Tesla moved more than $50 per share today. That movement back in June would have been a 30% increase on the stock versus the 10% that we saw today. I made a similar comment last week, but I think it's just worth recognizing that compounding and how much of an impact that's having over such a short period of time already, because it's fun to think about what that's going to look like in 5 or 10 years. Which brings me into a nice personal anecdote. Somebody this weekend asked me, what price would Tesla need to be for me to sell right now? It's a good question, and I'm sure it's a question that is on the mind of a lot of people right now. But my immediate reaction was there isn't one, really. I mean, I don't have a price that I would sell Tesla at right now. So the craziness of the stock over the last few months has been really exciting, but to me, it doesn't really mean all that much when it comes to my personal investment. It's obviously great for Tesla. It means if they need to raise capital, they can do that at an ever cheaper rate. I think it also has fundamental impacts to the business beyond just capital. I think it represents renewed confidence in the business, which is not only beneficial to shareholders, but also to employees and to customers as well. Obviously, there's no way to put a number on this, but I'm sure in Q1 and partially in Q2, people that were feeling nervous about the company and thinking about maybe buying a Tesla would be much less inclined to if they legitimately thought there were bankruptcy fears for Tesla. You're probably going to be much less likely to buy a car from a company that you have uncertainty about whether or not it will exist in the future. If it doesn't, how are you going to get service? Things like that. Wall Street clearly renewing its faith in Tesla, I think, alleviates those concerns for many. That has a positive fundamental impact on Tesla's business, and I'm sure with the recent gains the stock has had, that has allowed some customers to convert those gains into Tesla products. So that helps as well. So the price increasing, I think, is a really good thing for the business, but when it comes to me personally, I'm not invested in Tesla for a 2x or a 3x gain. So sitting here today at $525 per share, $95 billion market cap is great, but still not even close to approaching the value that I think Tesla is actually worth today, even discounted back for time value. So really for me, the only reason the share price matters, aside from that actual fundamental impact to the business, which is very important as well, but for me in my investment, the only thing this matters for is really my options trades, which I do trade. And for those, I really haven't sold anything up until the point where I needed to based on expiration. Going through all that stuff would take a long time, but predominantly my holding is long stock. And for that stuff, yeah, there's not really a price that I would sell at today. I mean, if we got above $1,000 per share sometime in the next couple of months, I would start to think about selling. I'd probably reduce a little bit, but even that I think would be a hard decision. So maybe if we get to that point, we can revisit the conversation, but for now, that's where my thoughts are today. All right, so let's get into the news. We had a very significant price target increase today from Oppenheimer analyst Colin Rush, who increased his price target from $385 per share to $612 per share. So a 59% increase in his price target. In his note, he said, quote, "Risk tolerance, ability to implement learnings from past errors, and larger ambitions than peers are beginning to pose an existential threat to transportation companies that are unable or unwilling to innovate at a faster pace," end quote. Really nice words to see there from Oppenheimer, but how long ago did we hear Elon Musk say it wasn't about creating moats, it was about the pace of innovation? I think that may be what Wall Street has gotten the most wrong about Tesla. There was this assumption that the other automakers would step in, and once they started to compete with Tesla, that would be it. Tesla's market share potential would be capped, and the fun little story would be over. We've learned, quote unquote learned, this year that that's not what's going to be happening. And again, now we then start to see that question shift from what could go wrong for Tesla to what could go right. Alongside that question of what could go right is the question of what if other automakers really can't catch up with Tesla? That's the question that Colin Rush starts to get at here. That's a good question, but really I think the better question is, what if they can't catch up with Tesla's pace of innovation? That would mean that Tesla's lead continues to not only maintain, but actually grow. I think Wall Street is starting to catch up to the fact that Tesla does have a significant lead here, but what I still believe remains underestimated and thus undervalued is Tesla's pace of innovation. That's where the question starts to change again from what if other automakers can't catch up to Tesla on electric vehicles to something more like what else could Tesla actually accomplish? And that brings in autonomy, that brings energy, and it brings the possibility of things that we're not even thinking about today. I mean, one quick example of that is that over the last 12 months, Apple's done $25 billion in revenue in wearables and accessories. It took the iPhone 3 years to get to that level of revenue. I doubt at that point in time, people were thinking, oh yeah, there will be a similar market for $500 smartwatches and $200 Bluetooth headphones within the next decade. People were still questioning really how disruptive the iPhone was. And that's one of the reasons that despite Apple stock doubling in 2010 from 2009, the stock continued to go up another 10x within the decade. So yeah, I think Wall Street is starting to catch up a little bit to the present day, but I think, again, underestimating that pace of innovation and the opportunities for Tesla over the next 10 years. In other analyst news, longtime Tesla bull Ben Kallo of Baird has increased his price target from $355 per share to $525 per share, but they have also changed their rating from outperform down to neutral, so a rating downgrade. In the note, Kallo said, quote, "We are moving to the sidelines, admittedly battle-weary after a hard-fought several years, including about a 20% outperformance over the last year. We think risk-reward is more balanced following recent stock appreciation. Expectations, particularly on the buy side, appear to be fairly calibrated, and we think the positive estimate revision cycle is in its latter stages. That said, we would not short the stock and remain positively biased over the long run." End quote. So this note came out last week, may have been a small influence on some of the more muted days of trading on Thursday and Friday. Not much more to add on it from what I've already said earlier in the episode. I think that addresses most of it, but thought it was an interesting update from an analyst that has been really bullish consistently for many years. Moving on from the analyst then, I want to hit a couple of Elon Musk tweets quick. One of our listeners, Trent Edie, was able to get a response from Elon on a question saying, quote, "When's feature complete FSD coming out?" End quote. To which Elon replied, quote, "Soon." End quote. Doesn't give us a whole lot of information, but definitely exciting and worth passing along. Just as a reminder, my expectations at launch for this would be pretty similar to what we saw from Navigate on Autopilot on the highways at launch, but the ability to navigate through cities. It's going to be insanely cool. There will definitely be issues, and Tesla will continue to work to rapidly improve those issues. The other tweet worth mentioning, I think, was Elon saying, quote, "Teslas will soon talk to people if you want. This is real," end quote. This tweet also had a video of a Tesla doing just that, presumably from the speaker that would emit the low speed noise that's required for EVs in the US, at least beginning September 2020. So as with anything Tesla, I think there is a fun appeal to this, but I think it also has interesting potential for autonomy in the future. One example of the utility there would be to replace what a normal driver would do with sort of a wave of the hand to maybe tell a pedestrian to cross or that they're yielding. An autonomous vehicle could easily signal that audibly. And of course, it will also expand the utility of certain Easter egg features that Tesla has. Next today is some news from China over the weekend on electric vehicle subsidies, with China's Minister of Industry and Information Technology saying, quote, "There was a subsidy cut on July 1st last year, and everyone has been concerned about whether we will see more cuts this year. Today, I can tell everyone we will not cut it in July this year," end quote. As Alex Potter talked about in our interview, the subsidies in China have been often changed and difficult to forecast, but based on the cut last year, there was some expectation that further cuts would be made this year. So this is of course positive news for electric vehicles in China, which of course is beneficial to Tesla as well. My understanding is that this relates to the roughly 25,000 yuan subsidy, or about $3,600 US, that applies to the Made in China Model 3. And with this news, it looks like that will be in place for the entire year of 2020. Definitely positive news there. Lastly today, I wanted to talk about Tesla's short interest. This came out on Friday after market close, and this was for the December 31st settlement date, our first update since the December 13th settlement date. So between those two periods, short interest was down only 1.2 million shares, from 27.5 million shares on December 13th to 26.3 million shares on December 31st. So that was about a 4.5% decline in short interest, while the stock price over that same period of time increased from about $358 per share to just above $418 per share. So a 4.5% decline in short interest and a 17% increase in the stock price. So even with the number of shares short declining, the actual value of that short position increased from under $10 billion to right around $11 billion, which is of course a bad thing for the remaining shorts. I think that small decline in short interest shows that what we saw from the 300s up to the 420s or so, that far was not a short squeeze. That was long accumulation, aided in part by short covering, but definitely not a squeeze in my opinion, as I was saying throughout that period of time. Now, of course, in the couple weeks following, the share price has continued to increase by another $100. So this next report is going to be really interesting as well. We'll get that on January 27th, and that'll be for the January 15th settlement date. Short interest is still high relative to other companies. That 26.3 million share number represents about 14% of Tesla's total shares and about 20% of the float, which float just means removing the shares from really long-term holders like Elon Musk, for example. So 20% still very high. That is it for today, though. As always, thank you for listening. If you have questions or feedback, you can send those to me at tesladailypodcast@gmail.com. Also follow me on Twitter at TeslaPodcast. If you want to support the podcast, you can do that at patreon.com/TeslaDailyPodcast. Don't forget to subscribe, and I'll see you tomorrow for the Tuesday, January 14th episode of Tesla Daily. Thank you.